I'm Alan Kinney, Managing Editor with REIT.com, and we're at the Waldorf Astoria Hotel in New York City for REIT 2011. Joining me is Joel Beam, Portfolio Manager with Forward Management, to discuss the conditions in the REIT investment market right now. Joel, thank you for joining us.
Thanks, Alan. Thanks for having me.
Are there any sectors where you see some particularly strong opportunities at the moment?
I don't know that it's any one sector. We just think with the household names certainly enjoying a really broad and strong audience right now. We think it's a good time to really look beyond the sort of the sort of leaders in the sectors and look for smaller capitalization companies and maybe less well-known companies, some of the orphaned IPOs. There's some opportunities there to do some research and find some, what I think is maybe, if not outsized value, maybe more downside protection.
And then how about areas where you might be just a little bit concerned?
You know, I think the concerns for us are really more, frankly, more geographic than they are sector-based. We're obviously observing, like so many other people, that the coasts of the country and the areas with really sort of strong economic characteristics coming out of this terrible recession seem to be doing pretty well. But I do think that there is a wide part of the country that really isn't benefiting quite as much, and I think that's really where we have more geographic concerns in that sense than sector specific. For example, we're concerned that office lease economics aren't well understood, but clearly that's a different observation in a place like Denver than it is in New York City, where the office lease economics, albeit not well understood, are still really quite strong. So, the other thing that I would say that's concerning us about all sectors, frankly, is and it's starting to bubble up in our minds a lot, is underinvestment in these properties, deferred maintenance or CapEx projects that have been delayed during this, really tough time. And we think that, that really the recognition of those needs may impact, future profitability to a certain extent.
And Joel, what's your take on valuations? I know that some analysts are thinking that we're probably hitting close to near full valuations.
To us, they don't seem cheap in the traditional ways that we're accustomed to thinking about real estate as cheap. But on the other hand, we recognize that we're living in a very unique time. There's extraordinary government intervention in the economy. You have 3% Treasury rates. You have honest-to-God unemployment that's something like 16% in this country. So, there is a very, we're living in a very unique time where a lot of things seem turned on their head. We think what's going on is that the companies and the properties are being perceived as a store of value. And so I think that, I think that, you couldn't argue that they're cheap. I think they're certainly priced for a lot of growth, and they're being perceived as a store of value. And that's going to, I think, result in, returns that are going to be fair. Unless there's a big economic pullback, in which case we could see some downside.
All right, well, thank you very much for your time, Joel.
Thanks, it's my pleasure.
For more from REIT Week 2011, join us at REIT.com.